what's up, everybody? It's Friday, yeah, October 29th. Last business day of the month. Well, I guess not. You got Saturday, Sunday, but we'll call it the last business day of the week. All right, so new high in the Dow, new high in the S&P, NASDAQ moving up there, maybe it did make a new high today, I don't know. We're close. Anyway, we're close, and we're close to that 36,000 Dow level, which I've been telling you about. You got a lot of people on here making these silly comments. I have to just mention that they said, oh, Mike, you said do this, back in whatever, a month ago. Yeah, but when conditions change, I change my mind. And you gotta, like that guy few weeks ago saying, yeah, flip-flopper, you went short. Yeah, I went short in September at the top, and then I turned around like a little bit off the bottom. It wasn't the exact bottom, and now, where are we? We're at all-time record highs. Look, you're allowed to get back in. If you're a dummy and just sit there, or a worse dummy, a 3 times dummy, a 10 times dummy, and just sit there out of stubbornness and be short, that's up to you. I can't do anything about that. That is your behavior, and behavior, remember, behavior is everything. That's really what, makes your account grow. It's not analysis, it's behavior. But we have the advanced analysis through MMT. What do I want to talk about? I want to talk about the flows. So far for the month of October, and we have one more statement day coming in on the daily treasury statement, which we'll get on Monday, but we're at 498 billion. So we are going to be about 520, maybe 514 billion. We'll be over 500 billion. And what I have been telling you guys is that we're going to stabilize at this level now. We're going to stabilize at this level. Now, a couple of you guys said, hey, Mike, we're already at the debt ceiling. Remember that 480 billion increase, earlier this month? I think that's when Congress, when they came to that agreement to extend it 480 billion. Yeah, we're already at the debt ceiling, but that is because Treasury sold debt to fill up its account again at the Fed. Now it's going to spend that out. So, we're still good for the month of November. We're still good for the month of December. It's going to spend those proceeds out, and don't forget, you got tax flows coming in at the same time, employment tax flows and stuff like that. So everything's okay, but we're still, I still have that date out there, that December 3rd, end of November, December 3rd date, when this whole shenanigans starts up again. That's what we're going to have to be worried about. I sold my Tesla at $1,102 today, and to be honest with you, I can't really give you a specific reason why. I bought that stock. There's a whole history of my involvement in that stock. Let's just say I bought it. Then it ran up very early this year in January. It was like, I think it got up almost to 800 something. I had said to you guys that the fair value was between 725 and 750 at the time I said that. That was back in January, and I did cash out. And then we had a series of pullbacks, and in July I got back in the 600 level, about the mid 600s. I did send out an email to my subscribers in July, in August, saying anything below 700 was a buy. And we got back in. I have subscribers who got back in doing fantastically well. Now, I sold out today at 1102, and to be honest, I can't give you a particular reason. I still think it's a major growth stock. I just think we can get a pullback. It seems to me a little bubbly, a little frothy, and only because I'm saying that only because, I mean, what does that do to Elon Musk's wealth right now? I mean, what is he like at 350 billion now? It's just getting a little bit, I mean, to me, it's getting a little bit crazy. And I do think we'll get a pullback where, you know, I'd like to see a pullback back into the 900s. All right. And if we get that, whatever, that if we run into problems in December because we don't have a budget, because they don't raise the debt ceiling, then we could definitely see a pullback, not just in Tesla, but in the general market. But the good news is right now the fiscal flows are good. I just checked the banking data. We had another decent increase in bank loans. That's what I was telling you. And, you know, my feeling is, and I've been explaining this to you guys, is that we are in a credit impulse now, a new credit impulse. And I think that combined with two other things. Number one, stabilizing in the fiscal flows at 500 billion. And number two, slower economic growth, right? We're coming down from 6.7% in the second quarter down to, you know, we got a 2% reading in the preliminary third quarter. The slowdown in economic growth should tamper down all this inflationary hysteria. I got to tell you something funny. I think I mentioned this yesterday that, you know, it started off earlier back in March. We're gonna have inflation. Then it went to hyperinflation. Remember this guy Michael Burry? I did the video on Michael Burry. You know, hyperinflation. We're gonna have hyperinflation. He got lucky with the subprime thing, but that's a whole separate conversation. Hyperinflation. The Fed is printing money. They're printing money. And so we went from inflation to hyperinflation to stagflation, right? Slow growth and inflation. And now I saw something in that goofy blog, Zero Hedge, that you call it double zero hedge, that now it's just about the stag. And it's not about deflation anymore. Like they're talking about the bond market is signaling an economic slowdown. Well, we just had an economic slowdown from 6.7%. Folks, I mean, if you understand what's going on in terms of, you know, and I've said this so many times, in terms of policy, in terms of the impact on policy, in terms of watching these fiscal flows, in terms of understanding how these flows drive things, in understanding the two types of money, the horizontal money and the vertical money. Horizontal money, you know, the difference between bank money and the government money. I mean, if you understand all these things and you kind of sit back and it becomes almost like a comical endeavor to listen to all the crazy nonsense talk and hysterical talk, because that's what it is. And you just sit there calmly, rationally, you know, and it becomes one of these things where you could just pick, you know, one after another, you pick out the flaws in their understanding. You pick out the contradictions in what they're saying. I mean, it's really it's an incredible thing, and it's fun. What else I can't think of a better word. It's just fun. So anyway, that's where we are, folks. You got to learn this stuff. MMT is your path to profits in the financial markets. When you understand, when you have knowledge, when you have insight, when you have the proper behavior. When you're not jumping around hysterical like a chicken with your head cut off at every little pronouncement, every little this, every little that. Now we got the Fed thing coming up next week. It's irrelevant in the big picture, okay? As a matter of fact, it's the opposite of what they think that, you know, the effect is going to be. I talked about this yesterday. When the Fed cuts back on its removal of interest-bearing money into the economy, it's leaving that interest-bearing money in the economy, which literally is an increase in print money. But they all think it's the opposite. That it's like taking away the punch bowl or something like that. Anyway, folks, it's Friday. Let's go have a glass of wine, whatever. Don't forget to go to my website, pitbulleconomics.com. Do it. Sign up for a 30-day free trial. You get 30 days to check it out. Make some money. A lot of you would say, oh, Mike, I can't do it anymore because, I got fired from my job or my income got reduced or something. Learn how to be independent. Learn how to be self-sufficient. You got the markets out there to make money. You've got tons and tons of dummies and idiots who don't know what they're talking about. Take their money. Educate yourself. All right, folks, that's it for today. Have a nice weekend. Bye.